afternoon, good evening, guys, and welcome to another video Diving Trader. Today, guys, we're looking at Nokia as an update. This is actually the fourth update on Nokia. Those of you that follow my channel know that I have Nokia on my portfolio. I've said in the past, and I'll probably say it again, I believe Nokia is a sleeping giant. Though some will disagree, especially today. They'll look at the headlines and probably think this is not a great stock to be investing in. So let's have a look. Let's go through it and let you decide for yourself. So the headlines read today: Nokia sees revenue drop in 2021 in fight for market share. Today is a good day to have a look at this stock. The reason for saying that is they've reported their results for the fourth quarter of 2020 and the full financial year for 2020. So let's have a look at it. So revenue has dropped, but let's have a look at some of the fundamentals. Well, let's have a look at the negatives, the positives and the negatives. So the negative revenue has dropped. Net sales for the fourth quarter were down 5%, and this was due to decline in network deployment and planning services, which were partially offset by growth in radio access products. Reported diluted EPS in the fourth quarter, which was negative at 46 cents, euro cents that is, compared to 10 cents in the fourth quarter of 2019. And this was primarily driven by net negative fluctuation in income taxes. Okay. Positives, we do have some positives. They've reported a gross margin, though it's very small. We're talking about 39.2% compared to 38.5% in the fourth quarter 2019, which is like a 0.7% increase. Okay, not great, but still it's an increase. And then the non-IFRS gross margin was 41.8% compared to 40% in the fourth quarter of 2019. So that's a 1.8% increase there compared to last year. They reported a positive operating profit. Okay, in the fourth quarter of 2020, that's third quarter in a row they've reported positive free cash flow. So this is good. This is a good bit of news. The positive free cash flow is increasing. Uh, it was actually 0.86 billion, so increased to 0.86 billion, resulting in end of quarter net cash balance of approximately 2.5 billion euros in total. So okay, that sounds good. It's not bad. There's some other things to consider which we can look at. COVID obviously had a big impact for the company, like it did many, and in fact they said that it resulted in an impact. Their net sales were around about 200 million in the full year of 2020. Having said that, it's compensated by saving on personal expenses and travel expenses of around about 250 million. Actually, that's quite a lot for a company in traveling and personal expenses. But yeah, so they've saved in that sense, so at least that's good. At the end of 2020, they announced a new operating model for them to align themselves with the needs of their customers to better maintain and achieve technology leadership in the areas where they choose to compete. I mentioned this in my last update. I've mentioned this before. This is where Nokia have failed in the past, where they've taken on everything and they failed at it. So now what they're doing is partnering up with other companies or even some of their competitors to focus on parts where they feel that they can add value or have a strong market in that certain area they're looking at. So this is the strategy, and it looks like it's starting to pay off slightly. Again, this is happening slowly. There's still a lot of competitiveness, but they're gradually getting there. These are encouraging results. However, they do expect 2021 to be challenging, with a year of transition with meaningful headwinds due to market share loss and price erosion in North America. So it's a competitive, very competitive market, and they know that. They know it's a competitive market, but I think they have the right head to move forward with this. Delivering on our new operating model for a strong and sustainable long-term business requires us to make further 5G investments in 2021, meaning we will have to sacrifice some short-term margin to ensure leadership in 5G. Okay, that's good. We know that for a company to grow and to move forward, they do have to invest, right? And the good thing is they do have a lot of free cash flow, so that will help. So they're not having to finance in that sense. So that's good. They have that free cash flow to further develop their 5G investments. Given an outlook for the net sales and free cash flow for 2021, as previously stated, we intend to provide a long-term outlook latest at Capital Markets Day on the March the 18th. They've also mentioned that after the fourth quarter of 2021, they will assess the possibility of proposing a dividend distribution for the financial year of 2021, taking into account the net cash position as well as the outlook for 2022. So, in fact, I don't know. Many of you may say this is a good thing or bad thing. Personally, I prefer this. I prefer that there's no dividend payout. And the reason why I say that is I prefer the company to take that money to put it back into the company for it to grow at a faster pace. I also prefer to see a return on my income on the share price rather than receive a dividend. I'm not saying that I don't like dividends. I would rather see a dividend probably in around about 3 or 4 years' time. Okay, when the company is already grown and taken quite a lot of market share, which is what I'm thinking they're going to do. So that's good. I don't mind not having a dividend at the moment. So I think that's a good decision by the board for doing that. Having said that, they will be looking into it later on to see if they bring it back in or not. They also mentioned that together with Vodafone, they've deployed a smart agricultural solution. It's a pilot project that's implemented 100 locations in two parts of India, which is Madhya Pradesh and Maharashtra. I don't know if I pronounced that well, which will benefit over 50,000 farmers. Okay, so good. So that enhances their productivity and income. I don't know how good this is for Nokia itself. I'm not sure how much revenue this has created, but if they've mentioned this, I'm assuming this is good for the company. So yeah, so that's a little bit on the positives and the negatives. So yeah, is this a good thing or a bad thing? Again, it's not it's not very appealable to the investor. So once someone is looking at this today, will think, well, it's not great. The revenues are dropping, blah blah blah. But again, we know this is a competitive market, and I still believe in this company, believe it or not. I wasn't expecting the results to be dramatic. I wasn't expecting to be something of a surprise. Having said that, moving forward, I still think it's a good long-term investment. If revenues do during the 2021 will actually be a key year, and in fact, I will probably look at reanalyze my situation in 2021 to see how the market share is going, how the revenues are going. If there is a decrease over the next year in revenue, I will reconsider my position. Okay. Having said that, for now, I will hold my position. If there is a small drop in the price today, I'll probably dollar cost average down. Having said that, it's going to be quite unpredictable. We're going to have some short sellers out there. Now, we know what happens with the short sellers. There has been a lot of speculative hype around this company recently in the Reddit forums. So I don't know. We might even see a short squeeze on this today. I'm not too sure. But either way, on the long term, I'm holding this company. So guys, thank you for watching. Guys, if you found this video useful, give me a big thumbs up. If you want to see further videos, please don't forget to subscribe to my channel. This really helps my channel to grow. And also, I'd like to hear your comments down below. If you're a Nokia holder, are you a long-term holder, short-term holder, any comments are welcome. And I'll make sure that I answer them as soon as possible if there are any questions. Thank you guys and have a great day.